A very good afternoon. You're watching Midcap Radar on CNBC-TV18. I'm Ekta Batra. With me is Sonal Bhutra. Well, it's turning out to be a session which is quite quiet at this point in time. We have a lot of people who are probably on holiday, still celebrating Diwali. Not to mention that tomorrow is a holiday for the markets. The Midcap Index holding up with a gain of around 0.5%. Relevant to this show, considering that we will be covering a lot of buzzing stocks over the next 30-odd minutes. Hi, Sonal.
Hey, Ekta. Good afternoon. Well, looks like markets are steady at this level for now. It is holding above that 17,650 mark. We have a strong resistance at 17,500 on the downside, and on the upside, support on the 17,500 mark, and resistance at 17,900. Let's see which way things go, because it is one day ahead of the monthly options expiry as well tomorrow. As Ekta said, we are going into a holiday as well. But let's do one thing. We'll start the show with the top headlines, and then we'll discuss everything mid-cap on the show as well. Indices extend losses after a strong opening for the truncated week. Mid-caps outperform large peers. FMCG and utilities lead the decline, while IT, autos and capital goods eke out gains.
Reliance reports a weaker than expected quarter for O2C, hurt by the windfall tax, even as telecom and retail reports strong performances.
JSW Steel gains after the company tells CNBC-TV18 margins will improve in the second half of the year, and the company has spared some debt despite adverse forex impact.
Mid-rung lenders like RBL Bank and IDFC First Bank see slippages rise. The lenders lose up to 3% intraday. Credit costs will remain low this financial year. IDFC First Bank's management tells CNBC-TV18.
Okay, all right. Those are the top headlines that we are tracking for you. The mid-cap index, it is in fine fettle. That one is up around 170 points. Couple of stocks which are at the day's low as we speak. Bajaj Auto is the one which is at the day's low right now. Kotak Mahindra Bank, ITC, HDFC, HUL. So some of these consumption names, they have come in a bit for a bit of profit taking. So all these are the ones which are putting some pressure on the Nifty as we speak. But on the flip side, at the day's high, we have Dr. Reddy's and L&T. Both these stocks doing really well. SBI is the other one which is doing well as well. So that is about the Nifty pack. Let's do one thing. Let's talk about mid-caps. In our special segment, Mid-Cap Movers, we have Vivek to take us through the mid-caps that are moving around in trade. Hey, Vivek.
Hi, good afternoon. So, some of the stocks that we are looking at, especially in the banking pack, some larger banks, but of course, these stocks are at fresh 52-week highs, and which is why we are highlighting them. Both Bank of Baroda and Canara Bank up almost 10 to 12%, post a very strong quarterly results. Also looking at some of the smaller banks. So if you're looking at names like South India Bank, there's been an upgrade as well coming in from ICICI Securities. Also J&K Bank. These banks today are moving up on very strong volumes. Some other companies moving on from the banking pack. CMS, this cash management info systems, this particular month has been a very strong performer. And NHPC, after the upgrade that we saw from, certain FI brokerages, this stock continues to trade much stronger in trade. Some of the other buzzers in the session, very strong volumes seen in this particular stock. Tips Industries, one particular stock also being spoken quite a lot as far as analyst meets are concerned. Railtel as well as RVNL, these stocks continue their up move. On the other hand, we are seeing selling pressure continue as far as Nykaa is concerned. This particular stock continues to hit fresh lows. Kajaria Ceramics also today falling on good volumes. Laurus Labs, after the downgrade as far as the sales targets were concerned, is something that's seen quite a bit of fall post the results. And Traction Technology today, this latest listing too, is seeing quite a bit of profit booking.
Okay, all right, Vivek. Thanks very much for that. So those are a whole host of broader market stocks in focus. Let's in fact now go to one particular company which has been in focus since it came out with its numbers on Friday. It was a disappointing showing, at least in terms of the guidance cut. Laurus Labs is the one that I'm talking about. It was the guidance cut which really got investors a bit worried. The stock was down 7 to 8 odd percent. On Friday's trading session, it's down 4.5% today. It's moving closer to its 52-week low. To talk more about this, we have Mr. Chava, who's the founder and CEO of Laurus Labs, joining in now. Mr. Chava, hi, welcome to the show. I wanted to start by discussing the antiretroviral segment. The formulation segment disappointed, and that was largely led by the ARV segment. What went wrong this quarter, and what can you guide your investors in terms of a recovery?
Good afternoon. In the antiretroviral segment, we have seen good recovery in APIs. Whereas in the formulation segment of ARVs, There was a sharp decline in the prices, and we didn't have a lot of offtake coming from long-term agreements during the Q2, and we didn't recalibrate our pricing for the in-country tenders. That's the reason we had a significantly lower sales of ARV formulations in Q2. But that doesn't mean we are having the same trend in the second half of this year. We have very good visibility for Q3 and Q4 for ARV formulations. So here, one has to keep in mind the company's strategy is to garner as much market share as possible, but you can't judge the performance based on one quarter ARV sales, formulation sales. And we are very confident things will get better in Q3 and Q4. As we indicated the investors, the ARV APIs got back to quite normal, and we do expect that trend will continue for the rest of the year as well.
Okay, so you are saying that you're probably going to see a recovery when it comes to the tender business, the ARV segment, in the coming quarters. I would like you to quantify that, but I'll just get back to that in just a bit. The other disappointment was obviously the guidance cut. Everybody was expecting you to achieve that $1 billion revenue guidance. Going into FY, say, in terms of an exit revenue run rate for FY23, it would stand at around 6,500 odd crores. Is there any upside or downside target to that? And what are you guiding for now in FY24? Are you confident in terms of providing some revenue visibility for that?
So here, when with enthusiasm, we gave guidance to the market, but some people like it, some people don't like it. That is the reason we were very transparent in letting our investors and market aware in Q2 itself that we are falling short of a revenue by target by 10%, so that people can take calls based on what we communicated. Instead of keeping it too close to ourselves, we made it very transparent to all the investors. That doesn't mean we are not putting efforts to increase our revenue base. But one good thing in Q2 is there is a lot of diversification of revenues. Our CDMO did very well, ARV APIs did very well, and non-ARV APIs, non-ARV formulations also did very well. So as a CEO, I'm very happy for the results what we declared in Q2. So the ARV is a one quarter phenomenon. It's not a regular phenomenon.
Yes, that's correct. The other businesses like CDMO and Synthesis has done well for you. Just one more last question on the ARV business. As Ekta was asking you, what kind of recovery are you expecting in the second half from this business? In the first half, it's down 27% on a YOY basis. How much do you expect it to recover in second half? And in terms of the contribution that is from short-term and long-term tenders, short-term is usually just 1/4 of your business in the ARV segment. You said pricing was not favorable this time around. What is the split right now? Do you expect that to come down as well?
We don't expect pricing to come down further. I think this has reached a bottom now. Only volumes will pick up, which we already have seen in the month of October itself. So we expect very good recovery from H1 overall to H2. We will do very well in ARV formulations.
Okay, so the synthesis business, investors and analysts are worried that a large component of the synthesis business was also aided by a COVID-19 related project which you are executing. Give us some clarity in terms of how much of your revenues probably consisted of that COVID-19 related project, and what is growth looking like going forward in the synthesis segment?
We can't give you specific details of customer, product and volumes, but we can give you clarity on our growth in synthesis CDMO business is coming from multiple partners and multiple projects in the pipeline. We do expect that division will be a star in the coming quarters and coming years as well.
it'll be strong, sir. Just some numbers, so to say. You have 3 manufacturing units coming up in FY 24-25. There is a capex on an R&D unit as well, and the expectation is they will start to support the project execution in your synthesis unit. Tell us what kind of addition will you see from here on? How much of a growth driver will the synthesis business be for you? How much of a revenue contribution will come in from here?
We are building 2 manufacturing sites for our CDMO business. One exclusively meant for animal health. That facility will be qualified by mid of next year. So commercial revenues will start coming from next financial year. We're also building a plant for a specific product for a customer, which we will give you details at an appropriate time since we haven't signed any agreement yet. So 2 new facilities will cater to specific customers and specific projects which we have very good visibility. And we're also building a dedicated R&D to support the CDMO activities. Right now, there are a lot of projects we are bidding. We have in the pipeline, some in the advanced stage. So to cater to those demands, we're increasing our R&D strength as well, much beyond what we have right now. Okay. So R&D will be ready by mid of next year, and then 1 facility will be ready by September, October next year. The other facility for CDMO will be ready by December 2023.
Okay. Mr. Chava, just a quick last question then. One of the things that did stand out were your margins, and that was probably aided by how you did in your synthesis business. But despite what happened in your ARV segment, you did manage to maintain those 28% margins. So give us some guidance in terms of what the margin picture would look like, probably in terms of a band, or whether you can sustain this 28-29% going forward.
I think we will sustain EBITDA margins closer to 30% for the entire year. And our business is strong, fundamentally good, and we are not losing any market share. We're only gaining market share in other products. So we expect to maintain the margins closer to 30%.
Last question from my side, Mr. Chava. You are very optimistic on the business, but the promoter holding is really low at 27.27%. What do you intend to do with that? Will you be buying more stake into the company? Any other plans, any strategic selling plans that you have here?
That's maybe we don't have any immediate plans to increase our stake or buyback right now. Our focus is on strengthening our diversification plans further beyond ARVs, and also building facilities to cater to CDMO. I think our focus is on that rather than worry about how much stake we have in the company right now.
Okay. Are you confident of that $1 billion in FY 24 at least?
We'll come back on that. So yeah, we don't want to comment on FY 24 right now.
Okay. All right, Mr. Chava, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Laurus Labs, tight-lipped in terms of guidance for FY24, but no, they're not going to achieve $1 billion in terms of revenue in FY23. That's primarily because of the volatility that they've seen in the antiretroviral segment, though they are expecting a recovery in that particular segment probably in the second half of this fiscal. The stock down another 4.5% at this point. Take a short break. Up next, we'll be talking to Sharda Crop Chem. They also came out with their Q2 numbers. The management will be with us. Stay tuned.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18, and as promised, we focus on Sharda Crop Chem. The agrochemical company delivered a weak set of numbers. It is especially on the margin front because of a significant exposure the company has to Europe, and the currency depreciation that we've been talking about is something that impacted the company's profitability as well. We have with us Mr. R.V. Bubna, who's the Chairman and Managing Director, joining us now. Mr. Bubna, good afternoon. Thanks a lot for joining us. Always a pleasure speaking with you. Well, you know, we have been talking about how Euro has seen a decline versus the dollar, and despite that, you have seen a 12% growth. You still seen a revenue growth in Europe. That is the region where you have maximum exposure to. Was it largely volume driven? What really worked here despite the headwinds that we've been talking about?
Madam, this is because of the product mix and margins here.
Okay, so
not volume driven.
So what was the volume growth in Europe?
Europe volume, 1 minute. I think there was a slight degrowth in the volume in Europe.
Okay. So you basically sold higher margin products, and that is the reason why Europe did comparatively well, despite all the headwinds that we have been talking about.
I have got the figure now. The volume, they've been a 4.5% degrowth in Europe on the volume.
Okay, so there's a 4.5% decline in terms of European operations. So what are you guiding for in terms of the European markets going forward for the second half? Are you expecting this kind of decline to probably exacerbate simply because of the situation that we're seeing? Inflation, tight gas supplies?
Madam, I think our performance will improve in the second half.
Could you quantify that? Could you quantify it, sir?
Beg your pardon?
Could you quantify the improvement that you're anticipating?
Madam, in the first half, there has been the biggest setback by foreign exchange loss. This foreign exchange loss will be reduced in the second half, mainly because now we are valuing our performance at the current rate. And we don't see much of a depreciation in the euro dollar from current level. On the contrary, people are expecting that it's going to go up. So that means the contribution because of the evaluation of the receivables at the end of the second half, the difference will not be very much, and we will see an improvement in the performance.
Okay. So you are holding on to your guidance of 15 to 20% revenue growth and margins between 18 to 20% for FY23?
Madam, I will make a small change. It will be around 15 to 18% growth in the revenue, and EBITDA will also be in the range of 15 to 18%.
Okay, so you are cutting down on your guidance on EBITDA margins for the full year now?
Yes, madam.
Okay.
Okay. All right, sir, you know, I was just looking at your segment breakup. Obviously, agrochemicals would be the bulk of your business, but if you could guide us in terms of how the non-agrochemical segment is doing, because that saw, I think, around a marginal growth this quarter as well. What are you guiding for in terms of, say, launches and business?
Madam, I would say deeper penetration into various segments in the world and acceptability of the company's products and performance and service by the customers. So customers are very positive, and they are also absorbing part of the foreign exchange loss in the prices.
Okay.
Your insecticides business saw decline around 22%. Anything specific? And at the same time, in fact, your other segment, which is basically your fungicides business, did very well. It was up around 50-odd%. Can you just tell us, you know, in terms of guidance for these two particular segments, what's driving growth, what's driving the decline, and what is the kind of growth we are expecting?
Madam, these qualifications or these analysis is mainly dependent on the weather factor. So in some of the countries which are more prominent and consuming insecticides, warm countries like India, in those countries there have been a lesser demand. Fungicides and herbicides are in the cooler countries, and their market situation has been good, and the revenues have grown.
Okay. Mr. Bubna, last question before we let you go. In terms of registration costs, have you seen any difference? Because you had told us they are very high, as I has setting up a plant in the European region. And in terms of capex, what does it mean for you? You were talking about 100 crore capex per quarter. What will this be for? How will you fund it?
And we'll fund it all through our internal generation. And the capex on registration front is continuously on the increase, because the authorities are going more and more deeper into the analysis of the products and its performance, which implies higher cost of analysis and field trials and other things. So this will be continuously on the rise, and it also gives us a good entry barrier, and that will help the company.
Okay. All right, Mr. Bubna, thanks a lot for joining us, giving us your outlook on the company, the plans here, and the capex as well. Good luck for the future plans with the company as well. Well, that's the word coming in from Sharda Cropchem. With that, we'll slip into a short break now. Here's some great news for investors. You can now track US market actions real time on Money Control. Log on to Money Control website or app and stay informed about all that matters in global markets. Welcome back. Well, this is our special segment, Midcap Spotlight, and today we are focusing on South Indian Bank. Strong set of numbers, Ekta, this time.
Well, yes, it's a 13 rupee stock, but as you can see, it's gone through the roof in terms of a stock performance. And just want to add that it came out with its numbers on Thursday. And we're seeing this kind of reaction today, so 13.5% higher at this point, because there has been a brokerage upgrade, which I'll come to in just a bit. But in terms of the numbers, if you look at it, slippages were lower, 370 crores this quarter. The restructured book also was lower at 1997 crores, so it was down 9.1%. The net interest margins were at 30-quarter highs, so it came in at around 3.21%. Operating performance was strong because we've not seen that come through for all banks. It was up over 280% on a year-on-year basis. NII was up 37.8% year-on-year, and the profitability also was 223 crores versus a loss of 187 crores, and advances not as robust as what we've seen for other banks, but it was up around 11% year on year. ICICI Securities has written on the stock, and they've upgraded the stock to buy from hold, and they've said they have a target price of 13 rupees, which is met in today's trading session itself. They believe improving trajectory in the operating performance sustained for the third consecutive quarter for South Indian Bank. So overall, they were quite positive on the performance.
Okay, strong momentum there for South Indian Bank. But with that, we've completely run out of time on this edition of Midcap Radar. Do stay tuned. Your stocks when we return.
Go